Hello traders, good day to you all. This is Tom with some Opteck, and this is a daily market review with the specific circumstance that we've got today. What I want to do today is, first of all, you know what, let's have a quick sound and visual test. If you can see the screen and hear my voice clearly, please type on the chat if the volume is too high. If there's a problem with the visual, just type on the chat and I'll try to fix that through my end. Perfect. Great. Thank you very much. So I just began saying that today we've got a very specific situation where we can benefit from the circumstances on the chart. For the last approximately half month from the 8th of November, we had a very low amount of liquidity. It's not that we encountered a position where we couldn't participate in trades, but we did not have the large amount of movements as we would like to catch through the market. And right now we can say that the market is more liquidized, definitely more liquidized. We will see that through the charts, and I will describe my expectation. I want to prepare you for the current markets announcements that we were expecting to see at 1:30, and I want to describe the move that occurred on the dollar index, and through that image I want to reflect my expectation for the entire dollar's reaction. Yesterday we had, and that happens usually. I can tell you that it happened several times this month, and it happens usually when the US market begins to operate. We see large movements on the dollar instantly at the moment that the US market is beginning to operate. So I would advise, if you'd like to avoid analyzing the charts and eventually having diverse movement, of course it can move toward the direction that you've predicted, but if you'd like to stay outside of the market at the moment that the US market begins to operate, it'll be a good idea, because sometimes it's changing the current market status, and I'll definitely leave the charts alone until we will see what will be the outcome of the US market. Now, today we already had a very important announcement from Draghi. Anyway, I'd like to talk about this Forex Factory website. When we're looking at announcements, that's one thing, but if we would like to know what caused specific movement, sometimes I'm looking at the charts and there wasn't an enormous important announcement, and then I'm just scrolling down and you can see the latest news, the latest announcement. Sometimes you'll have information over here that wasn't stated on the calendar itself. All of a sudden, Draghi is coming out with some sort of an expectation or report for something without any warning. So yesterday we had that specific issue. Draghi said something about the same thing about rates and interest rate and negative deposits issue that they've got in Europe at the moment, and that caused an enormous movement without having this expectation from the calendar itself. So if you'd like to know why things are affected from what, you can definitely scroll down and see if you had an indication regarding a specific statement or something like that. So first of all, we've got an announcement. We had an announcement from the European Central Bank today. President Draghi talked about the variety of issues that they've got in Europe today, and he gave an additional strength to the euro, which is the opposite of what happened yesterday. Yesterday, there was an expression regarding the negative deposits rate again, and that caused the euro to lose strength. Because of that, we saw that the dollar gained strength. And let's actually analyze the chart of the dollar and see what is our expectation for today and for the next several days to come. After this announcement at 1:30, which will definitely move the market, definitely give a lot of liquidity and a lot of potential, we've got another announcement from the Fed at 3 p.m. GMT, and another announcement from the European area, German indication. And I do expect, I said that from the beginning of the week, that Wednesday and Thursday will be the liquidized days that we're expecting to see. So let's go to the charts and start to figure out, according to structure, what we can see and what is our expectation. This is the chart of the dollar index. I've analyzed this chart for the last several weeks, explaining my expectation from the dollar itself, how it will react, and what I'm expecting it to form in front of a variety of assets. If I'm analyzing the dollar index, I can look for potential trades in front of the euro and in front of the Swiss franc, the dollar, Swiss franc, and the euro versus the US dollar, because they represent, they are the most accurate, or let's say correlated currencies to this specific indication. Just to give you an example, if I'm placing the dollar Swiss franc on top of this chart, it will be in a green line. You can see that indeed the strength and weakness, average strength and weakness of the dollar in the market is reflected through the dollar versus the Swiss franc. And I can place the euro dollar, which will be the opposite, because the dollar is on the right side, meaning a downtrend on the euro dollar will express strength on the dollar, not like an uptrend that on the dollar index that expresses the strength of the dollar. So we do expect this to be a mirror to the dollar index, and if I can see a potential for stronger dollar on the dollar index, I will participate in a trade for a downtrend, for a put option. So that was a quick explanation regarding correlation. The strongest correlation is in front of the dollar, Swiss franc, and the euro dollar, if we're basing our opinion on the dollar index. But still, we can use the strength of the dollar in front of any weak currencies in the market at the moment, or vice versa. If we're expecting to see weakness on behalf of the dollar, we can express that in front of strong currencies in the market. So again, let me just describe what we already had regarding the structure of the dollar index. We can see that generally, and again, if you've watched my webinar regarding psychology, you know what is formation, what are impulse movement and corrective patterns. We've got a long correction if we're looking at a daily chart. Obviously, if we will go to lower time frames, we will see the fractals inside movements, and then we'll be able to make a more accurate assessment. At the moment, it seems like we've completed a specific structure of a downtrend movement. I won't go further into a long-term Elliot Wave analysis, but we can definitely say that that looks like a corrective pattern of an ABC dropping down. And from this moment and beyond, we were expecting to see large liquidity forming stronger dollar in the market and strength of dollar in front of many assets, other assets. Just to give you another correlation regarding the US dollar, a stronger dollar in the market, meaning weaker commodities, weaker gold and weaker silver, and that's another potential that we can use when we've got a perspective regarding the dollar. So let's go to a low time frame to describe the moves that we already had since this move over here. 4-hour chart. Again, it's the same pattern that we saw dropping down. From the moment that we've crossed the trend line beyond the entire corrective pattern dropping down over here, we were forming an impulse movement climbing up. Until this point, where we didn't know if we were crossing the trend line or not. If that's the case, then we were expecting to see a large indication in the market, some important announcement that will deliver this confidence. And eventually it came. We've received the confidence. As you can see, the market, while it crossed the trend line, it bounced after that on the trend line for forming a corrective pattern and continued higher. Let's go to 1 hour chart and I will analyze this entire structure again. I did that for several times during this month as we went along with the additional information. So from this point and beyond, we know that Elliot Wave is describing moves as 5 and 3, 5 and 3. That's the basic idea of Elliot Wave. I don't want to get into complex corrective patterns and other issues, but that's the plain simple fact, and we can use that as good as any analysis as that we're doing. So we can say that this move up climbed up in 5 waves, 1, 2, 3, 4, and 5, completing a triangle here at the edge. Over here I stated that I'm expecting the dollar index to drop down back to 80.3, 80.5 in a corrective pattern of an ABC. We've received an A, a B, and a C dropping down, and we can say that that was a successful expectation because indeed we've dropped down to 80.48. That was a great target, and from this moment and beyond, as you can see, we've returned to the impulse movement. The impulse movement that began yesterday when Draghi stated the different issues regarding the negative deposits on the bank, and they don't worry about that. They're not worried, but they do want to analyze the market and to see whether they're going to change rates again. And from this moment and beyond, we were basically crossing a very important support line of the corrective pattern. And here I'd like to show you that we've basically received the same thing. On 4-hour charts, we had a long-term drop down, a corrective pattern. Crossing that, stated that we're moving beyond the corrective pattern. If I'm coming closer to this specific structure, again, we've climbed up in an impulse movement, and we've crossed a trend line indicating that we moved beyond the corrective pattern. So the analysis for this specific pattern I'll do on a lower time scale. Let's take an hourly chart first. Okay. As you can see, this movement again formed a 5-wave sequence, 1, 2, 3, 4, and 5, and we've got on the lower time frame, we will count this corrective pattern, but I want you to pay attention that basically on an hourly chart, we're almost approaching a potential for an uptrend. Stochastic at the bottom, RSI above 50, great potential for an uptrend. Let's look at a lower time frame to analyze the structure that we've received over here and to give some sort of potential regarding the destination of this corrective pattern before we will follow an uptrend movement, meaning a stronger dollar in the market. If you have any questions, just type on the chat. I do want all the explanations to be logical. If you need any assistance, you want me to focus on a specific issue, on a specific asset, just type on the chat and I'll be able to refer to that. A 15-minute chart reveals indeed a more accurate, let's erase all the information and look at the clean chart. Okay. So again, we can see a 1, a 2, a 3, a 4, and a 5, a very accurate structure of the Elliott wave analysis, where the 4th wave is returning slightly, while the 2nd wave is returning an enormous amount of pullback. We can even place the retracement lines and see that indeed the 2nd wave returned approximately 72%, and that the 4th wave again made a very small corrective pattern without completing even the 38.2%. So we know that that was a very pressured move, and we can continue analyze that. So this corrective pattern, again, it's usually forming 3 waves. We had 5 waves climbing up, and we've got an A, a B, and a C dropping down. A C dropping down should usually drop down to the 4th wave, which is over here, and that's a logical completion of this entire cycle. meaning that my expectation at the moment, because of the Elliott Wave analysis, is to see a stronger dollar in the market, meaning that my expectation from the announcement that we will receive in an hour and 12 minutes will be for a stronger dollar in the market. We can even add another Fibonacci retracement, and we can see that we've reached the 38.2%. A more logical correction will be at the 50 level. Okay, so that's a logical destination for this downtrend movement, and we may see a bit more weakness on the dollar before we will see the reaction of the announcement. Now, if you'd like to use information as it should, I mean, if you'd like to take trades in the with the need of being as careful as you can just wait for this trend line to break. You can just wait for the price to break this trend line higher. And this will definitely state that the dollar at the moment is changing its movement. But again, if my assessment is correct, and the announcement that we're expecting to see will indeed cause a stronger dollar in the market, then obviously that will be a very strong movement higher, and that will cause this line to break instantly when the announcement will be delivered. So anyway, it will definitely be a very strong movement, and it's not like a question of whether we'll climb up a bit and bounce on the trend line and then maybe the market will cross. If we will have the announcement that I'm expecting to see, then indeed it will break the trend line easily and climb higher and higher. That is the expectation from the dollar index according to the Elliott Wave analysis. With all the information that I gave you, I still want to state that the Elliott Wave analysis is not here to predict the market, but to give you the largest probability. And that's the largest probability at the moment, according to the structure, analyzing the entire cycle for the last month and a half or something like that. So across beyond the trend line, definitely indicating that the dollar is gaining strength, and we can express that in front of different currencies. How can we take this information and actually use that on the binary option market? That's what we're here for. In order for me to give you my assessment and the potential trades, I will go to test the strength and weakness that we've got at the moment in front of the Japanese yen. Okay, so as I'm always doing, let's arrange the strength and weakness. We can see that the pound still being the stronger currency since yesterday, it's still expressing the largest amount of strength in front of a variety of assets. The dollar is gaining strength as well. The euro is among the strong currencies, but the Canadian dollar is even stronger. Okay, just arranging the scale. 61.59. Swiss franc was the strongest currency for the last several days as well. We can see that the perspective generally haven't changed beside the Japanese yen, which lost a lot of strength in the market. That's good for the economy generally. That means that the Nikkei climbed higher, and we know that there's a lot of good feeling, euphoria, confidence in the market. You can call it whatever you'd like. That's the scale that we've got at the moment. So let's just go over that very quickly. The pound, the dollar, and the Swiss franc are the strongest currencies. The dollar itself I'm putting outside of the equation because that's the question that we've got right now. Okay, I'm asking myself whether the dollar will lose strength or gain strength. At the moment, the perspective is that the dollar will gain strength, and because of that, I'd look for trades of the dollar in front of weak currencies. Let's see who's weaker today. The Australian dollar, just as it had for the last several days. the New Zealand is weak, and the Japanese yen is weak. We can basically say that we've got two major groups in the market today. Strong currencies, very strong currencies, 59.61. It's a lot of strength. The Japanese yen is somewhere in the middle, not the strongest one and not the weakest one. And the weakest group is the New Zealand and the Australian dollar. And that's beautiful to see, because I'm always saying when the Australian dollar and the New Zealand are the weakest, the strongest, or at the middle, but when they are presenting the same image, when they are located at the same group, it means that the market is organized. There's a logical reaction of structure, and that's how we can analyze the chart with the confidence that we need. So Australian dollar versus the New Zealand, not versus the New Zealand, sorry, Australian dollar and New Zealand in front of the dollar. If we will see the dollar gaining strength, it will be an enormous movement toward the stronger dollar in front of the Australian dollar and the New Zealand. Another thing that I want to go over are the currencies that have straight correlation with the dollar index, the Swiss franc and the euro. I want to analyze that and show you again from what limit I will decide to participate in a trade of the Swiss franc and the euro in front of the US dollar. Again, the dollar Swiss franc, it represents the same image. Again, I'll go to 15-minute chart, the same image as the dollar index, almost identical. We've got a 1, a 2, a 3, a 4, and a 5. From this moment, we've went lower in a 3-wave sequence, an A, a B, and a C. Completing this cycle, it seems like this asset wants to climb higher. And again, I'm placing a trend line, and cross beyond the trend line will indicate instantly a potential trade for an uptrend. Try to take the trades for long term, 1 hour trades. It'll be logical, because once the announcement will come out, then we've got a lot of potential having both directional movement. A bit of an uptrend spiking, then a bit of a downtrend, and then a continuance. The market needs to digest the movement, and because of that, it's not logical to try to catch movements for 1 minute, 5 minutes, or even 10 minutes when we've got such an enormous potential of having a variety of opinions in the market. I've got a question from one of our traders. Sure. I'm using Opteck's platform when I don't have the Swiss franc at the moment. Can you analyze another currency? Of course I will. Don't even think about that. I'm going to go over the euro versus the US dollar instantly, and I'm going to go over a variety of other assets to show you the potential. Don't worry. So this will be a good potential trade for an uptrend once we'll cross the trend line. Again, if we'll cross the trend line. That is the assessment at the moment. That's the logical structure, and that is my expectation. Again, we can even over here pull the Fibonacci retracement, and as you can see, in this case, we came closer to the 50 level. Again, we might see another downtrend that will pull this chart accurately to the 50 level, and then we will climb higher. So even if you see a bit of a downtrend at the beginning of the announcements, don't change your opinion. Just understand that it happens sometimes, a pullback and then climbing up. Place a trend line, wait for a cross beyond the trend line. My assumption is that if we will see the expectation as forming as I'm expecting it to, then we will have a spike beyond the trend line easily and a potential trade. Now, what should we do when we've got such a great potential? What kind of instruments we should use? First of all, we've got the high and low, the on demand, which are they are usable in this case, but we can also use the one-touch instrument, meaning that we do expect to see large amount of liquidity, and we may see strong movement toward both directions, an uptrend and a downtrend instantly. So anyway, You can look for a downtrend movement on the one-touch instrument on our platform, on the gold and on the silver, and you can look for stronger expression for the dollar on other currencies. Let's go to the euro versus the US dollar, as I promised. Euro versus the US dollar, again, approximately the same image. We can see that we had a drop down, especially in front of the euro, which expressed a large amount of weakness, and just this morning gained the strength back up again. 1, a 2, a 3, a 4, and a 5, dropping down in 5-wave sequence, showing an impulse movement dropping down, and we've got an A, a B, and a C. Even more clearer and logical structure over here with an ABC pattern. Again, just showing you that generally we're talking about the same structure. I will pull the Fibonacci retracement, and you can see that indeed even here we've reached approximately the 50 level. Again, a bit more uptrend, and will be there. That is the logical destination. But even if we've retraced at 38.2%, it's still a logical retracement to complete this entire structure. Okay, so that's a great field to start to build the potential for divergence on the chart. Again, in here, we're expecting to see a downtrend expressing the strength of the dollar, and this is the trend line that we need to break in order for us to continue lower with an impulse movement. Now, let me check my station over here. We went over. I can see someone raised his hand. Just type on the chat any question that you need, and I'll be able to assist you. Ronnie, anything that you need, just type on the chat, and I'll be able to pay attention to that. A specific asset or general question, everything is just type on the chat. Okay, so looking at my station, I can see okay, that's a great thing to see. While all the other currencies expressed weakness in front of the dollar yesterday, the pound, which was the strongest currency, made the smallest movement. Still, it is a logical impulse and a corrective pattern movement, but as you can see, in terms of retracement, it climbed higher, 61.8, which is a very accurate retracement. In this case, because I know that the pound is the strongest currency at the moment, my expectation is that we may even climb higher toward the 72%. 72%, it's a very logical destination to retrace this move before we will begin to drop down. But again, it's not logical to express strong currencies in front of strong currencies. If you'd like to use the strength of the dollar, if we will receive stronger dollar in the market as an outcome of the announcements, then you should use that in front of the Australian dollar and in front of the New Zealand. You've got both currencies, currency pairs on our platform, and you can use this kind of liquidity. Let's go over the charts and let's see if we've got some other potential trades. Obviously, the pound in front of the Australian dollar is still a logical trade to participate in, because we know that the pound itself is the strongest one and the Australian dollar is the weakest one. It's been like that for the last 3 days. You can see that continuance of a strong uptrend movement. And for traders that had a session with me, I stated that this will be a logical long-term analysis for 1-minute trade. Okay, traders that followed this chart for the last several days using the 1-minute trade strategy could have used that for a very long and large amount of trades. We've got another question. This is a fantastic webinar and these charts are amazing. However, for a new trader like me, 5 days only, how can I learn better the way these charts work? Thanks, Carlos. Carlos, I will talk to your account manager and he'll give you a call. He'll help you with all the information that you need. It is our privilege to expose you to the important information and to give you our education almost free in order for you to achieve higher level of analysis and having the ability to analyze charts and taking trades according to your analysis. This is our goal. So I will talk to your broker and he'll help you. He'll assist you with anything, and even if you need an additional assistance, education, anything else, you will receive all the information from your broker, and he'll definitely I'm sure that you'll find it very beneficial, especially if you haven't received information using other markets such as the stock market or the forex market. It's like coming to Opteck as a clean sheet, and we'll be able to really set up your perspective regarding the market. Another question: pound Australian dollar is not available on demand. That's right. Pound versus the Australian dollar is not available, but you've got that on the regular high and low instrument, and you can use that over there as well. Every bounce lower, every pullback is continuing higher, and we saw that for several days. You could have used the correlation idea, and from that image we saw that indeed the pound is the strongest for the last several days, the Australian dollar is the weakest, and that was the most logical trade to attend to during the last several days, where we did not have a lot of liquidity in the market, but still we had enough knowledge to base our trades on while the market was bouncing backward and forward in front of many assets. In here we had a very nice and clean structure of impulse movement and a corrective pattern. Another question, so I'm now looking at the dollar Japanese yen. The US dollar is way stronger, but there is a trend line now correct. I will look at that in a second. So when would it be broken, or is it not a good time to put a call now? No, of course not. Do not trade at the moment. You need to understand that at the moment the market is exposed not to information but to assessment, but to a potential according to not a logical analysis. When we will have the announcement, then we can see the strength of the dollar, whether it's dropping down or climbing up, and then we can make an assessment. As I said, the dollar, first of all, do not trade in front of the Japanese yen. I said that the Japanese yen at the moment is not the strongest currency and is not the weakest. If the dollar is losing strength or gaining strength right now in front of the Japanese yen, you've got a better probability to express that in front of other currencies. The Australian dollar and the New Zealand are the weakest. If the dollar is gaining strength, use that in front of the Australian dollar and the New Zealand. The pound and the Swiss franc are the strongest, and even the euro. If the dollar is losing strength, use that in front of the pound, Swiss franc, and the euro. You've got all the possibilities to have the largest amount of profitable trades, understanding the logic of correlation, and that's what we're doing here today. Again, the Japanese yen may deliver good potential trade, but you've got a better probability in front of other currencies. Carlos, my broker is Adam Foster. He's very good, by the way. Of course, he is. All of our brokers are very professional, especially with our methods, and they'll be able to assist you with anything that you need. And I'll talk to him, and I'll tell him specifically to give you a call and to help you with the technical issues. I'm sure that you'll find it very helpful. Elwin, you're saying the Swiss franc is also not available on the on-demand instrument. You're right, but you've got that on the dollar Swiss franc. You've got that on the high and low instrument. You know what? Let's go to the platform. I'll show you that. Take a second. On my chart station, you can see that I've placed all the on-demand instruments to analyze them, because I know that I've got better probability using an accurate entry point and an accurate time frame. So all the assets that you can see over here are located at the tabs on my system and the tabs of the on-demand instruments. High and low, you've got the dollar Swiss franc. Let me find it. Currencies. Australian dollar versus the Swiss franc. The dollar Swiss franc. There we go. In this case, we've got the trade for 50 minutes from now, another 10 minutes and 46 minutes, 55 minutes. This trade specifically, it's just opened, but again, we can't use that for now. Just wait for the announcement to be delivered to the market and then see the expression. Again, you don't have to trade all the time on the on-demand, although that's the best instrument using an accurate entry point. Again, a one-touch instrument is logical to trade on using the current market's potential. Let me show you a small explanation for that one. Just for the example, let's take the crude oil. I don't think that it will be affected significantly. The CAC 40 will definitely be affected from the announcement, but that's not entirely. Okay, let's take an example. Let's say that right now I'm looking at the silver. Although this trade is going to end, but let's say I'm looking at the silver, and I've got a line at the top, I've got a line at the bottom. Instead, I'm stating that I'm waiting to see large amount of liquidity. Large amount of liquidity. If I'm marking the up line, higher line, I'm stating that I'm expecting the market to climb higher and to touch the line, and then the option will be closed and I will gain 100% profit on my investment. So anyway, we will have large movement as the announcement will be expressed. That is the basic assumption. We can make that assessment because of what's going on in the market. Any kind of information is delivering an additional confidence or lack of confidence, and we've got a lot of traders invested in the market, not like we had for the last several days. I don't want to say weeks, but days. And this position where a lot of traders are already in the market is, it's easier for announcement to move the market, because let's say that at the moment the euro gained strength for the last 2 hours, 3 hours. So a lot of traders already placed their investment toward a stronger euro in the announcement, and a lot of traders are invested in the market. If a dollar will gain strength in the market, then instantly a lot of traders will pull their funds out, causing large amount of liquidity to deliver to the chart. So we've got a potential, not only because there's a potential for investment, but there's a potential for investing fear inside the psychological expression of traders that already invested towards a specific direction because of the liquidity that we already had. Another question is, thanks for the answer. Still one question. Are you talking about an announcement? But how do we know when there is one, or and how do we have okay, I've talked about that. That's a question of basically how do we know there's an announcement. You should talk to your broker, and you should watch the first webinar regarding liquidity, where I'm explaining how to locate your time frame during the day, finding a potential where we were expecting to see large amount of liquidity according to announcements and different markets time frame. But let's go to the forex calendar. Based on the calendar, I know when announcements will be delivered to the market. In this case, we knew that President Draghi, President of the European Central Bank, will talk today, will give its statement regarding different issues that we saw since yesterday, and that eventually caused the euro to gain strength. So I knew that at 11:30 I will have some sort of an announcement regarding the euro that will deliver large amount of liquidity, and that was the potential. Today at 1:30, just as we've got on every Thursday, we've got unemployment claims statement. And that's a very important statement, especially because the federal bank, the Federal Reserve in the United States, is constantly worried about the current unemployment rate status. So unemployment claims, it's affecting the unemployment rate, and they are you have to understand that all the system that's going on right now in the United States is it's pulling the market toward a specific unemployment rate. They've said that they've stated, if I'm not mistaken, from the beginning of the year that their goal is to reach 6.2, 6.3% of unemployment rate in the United States, and until then they'll keep on pushing more funds into the market. So any kind of change regarding unemployment rate or unemployment claims, anything that has something to do with the non-farm payroll at every first Friday of the month is an announcement that it's it, it, it it's implying a lot of information for other traders. Let's say that I just want to give you a general potential. Let's say that at the moment the unemployment rate will drop down significantly, all of a sudden. So of course it won't, but let's say that that will happen. So the perspective of investment is that the federal bank may lower the support to the market eventually at one of their meetings, because the logical expectation is that because they approach a potential better unemployment rate in the United States, then they'll step outside of the market, not helping the market as they're doing today. So in this case, we know that one announcement is delivering confidence toward a specific potential, but changing the opinion toward another area. And in this case, we know that that will affect the market significantly. So the calendar, this is the calendar, and you should ask your broker for the liquidity webinar. He'll be able to assist you with that. When we are putting together a chart, does the RSI has to be always at 21 and the again, Carlos, I will talk to Adam and he'll help you with that. You got to go through the basic explanation about the strategy. Even if you'll use that just right now out of the blue, I don't think that it will help you a lot. But yeah, you're right. The RSI is at 21 and the Swiss and the stochastic are at 8.83 and 3. Let's go back to the charts. I want to give you the assessment. As you can see, indeed, the pound again dropped down, gave us an exhaustion level, and gave us another good potential trade for an uptrend. Just keep on moving. The Australian dollar is still the weakest. The pound is still the strongest. A good potential for a variety of trades. But let's go and analyze other charts as well. Going over the on-demand instruments. At the moment, you see that the Australian dollar and the New Zealand are they formed approximately the same strength in front of the Japanese yen, and we can see that the RSI is between the 52 and the 48 area, meaning that that's not a logical trade to participate in. A downtrend movement potential over here, the Australian dollar versus the US dollar. Again, logical. The dollar is basically the stronger than the Australian dollar at the moment. We will need to wait for the announcement in order for us to participate in this trade. Nothing over here. Nothing over here. Let's keep on analyzing the charts. Another question, is there a recording of your first webinar or liquidity? How can I get it? Talk to your broker. They've got the links. They'll be able to give you an additional support and explanation regarding the webinars, and they'll be able to see that you receive all the information and you can do that on your own on your station. That is the broker's part in your education series. The pound Japanese yen, again, the pound is pretty strong. A pull back down will give us the ability to join this uptrend movement only if the stochastic will drop down. Again, I'm saying if, because the pound is way stronger than the Japanese yen, and the ability to pull the stochastic lower it's very difficult. Maybe on a 5-minute chart we will see a logical, accurate pullback only on specific indications. We had a great trade over here and a great trade over here and another one over here, but beside that, it's the pound is so strong in this case that it's not allowing the Japanese yen to pull the chart, making a logical corrective pattern. It doesn't mean that we can't trade it, but it means that we need to go to low time frame to locate potential trades. The pound versus the US dollar, again, we're expecting it to complete the formation of the corrective pattern, but still the pound is stronger. If the dollar will gain strength, I do not expect to express that in front of the pound. Not logical to express strong currency in front of strong currency. Just if the dollar will lose strength, then the pound versus the US dollar will be a logical trade for a call option. The dollar versus Japanese yen, just as you stated several minutes ago, is approaching good potential. But again, usually what happens before large and important announcements is that we can see that we're reaching the exhaustion level according to the stochastic, but we know that the market is in expectation mode. Okay, it's in expectation mode. It's expecting to see the announcement regarding the dollar, and until the market won't receive that confirmation, it will stay outside. The traders and investors will stay outside, and I'm not expecting to see an enormous movement climbing up beyond this trend line. Right now, my expectation is to see an A, a B, and a C dropping down. That is my expectation from this formation and logical reaction to the announcement. Okay, let's go and see what's going on with the commodities. I've talked yesterday and several days before on the gold, and I said that the gold should drop down. I've placed this trend line. I stated that once we'll cross this trend line, we will begin another impulse movement dropping down. From the image that I can see right now regarding the gold, we formed a 1, a 2, a 3, an A, B, C of the 4, and right now we're expecting to see the gold dropping down again. In terms of structure, that's another confirmation for a stronger dollar in the market potential. Okay, I've seen the market forming the structure according to the Elliot Wave, and I've seen the market forming a different structure, and then we need to make another assessment regarding the new structure that we've received. At the moment, analyzing the variety of assets, my assumption is that the dollar is expected to gain more strength in the market. Okay, so gold and silver both forming a choppy overlapping corrective pattern after it formed an impulse movement, a potential for a downtrend, no question about that. There's another question. So weak gold is most of the time a stronger dollar. I will give you an answer for that. I'm taking the gold at the moment. I'm pulling the chart. It's an hourly chart, and I'm going to place the dollar index on top of that. It should be a mirror. Oh, sorry. So that's the gold. Again, let's take a clean chart. I want to see that widely. Okay. So I'm placing the dollar index on top of that one. And it should be the opposite. Whenever the gold is dropping down, we should see strength on behalf of the dollar. This downtrend movement was expressed through a stronger dollar in the market. This uptrend movement on the gold was expressed as a weaker dollar in the market. I can't say that the dollar is connected to the gold and it's stating the position of the gold all the time, because the gold is not, it, it has a lot to do with the euro, with the Australian dollar, but mostly with the dollar because the gold is being valued by dollars. When we had a crisis in Australia just several months ago, a company stated that they're going to close a mine. That already from the fear of traders without having the expression on the market itself, because gold is being traded with future contracts, meaning that at the end of the month we will have an accurate indication regarding the amount of gold that will be released to the market. Now, eventually, at the end of the month, this price will change the rate of the gold. But during the month, if we've got an announcement from a company or from any kind of thing that has to do with the gold, we will receive the expression on the assessment, only based on the assessment regarding the end of the month statement. Another issue that we had in Europe, from Spain or from Greece, if I'm not mistaken, one bank said that they're going to push all the gold back to the market because they need to receive funds to um, deliver services to their clients. So just the idea of pushing more gold to the market, obviously dropping down the rate of the gold because we've got a larger amount of gold in the market, and only assessments cause large movement on the gold. Now, obviously, that affects the dollar backward and forward, but still, you can see that there's a straight correlation between the gold and the dollar itself because it's been valued with dollars. That's the obvious first correlation that we can find regarding the gold and the silver both. Now, why am I saying always gold and silver, gold and silver? Because if I'm placing the silver chart on the gold, you can see that they're basically forming the same structure. So both of them are affected usually by the same issues, and usually what happens when I can see potential for a gold trade, for a trade on the gold, then I'm looking at the silver as well, because if I can see a downtrend potential on the gold and the silver is weaker at that specific moment, I will receive better trade on the silver. And vice versa, if I can see an uptrend potential on the gold and the silver is weaker than the gold, so I know that the gold will pull higher, will express stronger and larger movement that will be more efficient for my trade. Okay, so going back to the analysis, again, an impulse movement dropping down, a choppy A, B, C climbing up, that's a potential for a downtrend. A trend line below the corrective pattern will indicate when we're crossing and proceeding toward an additional downtrend movement. Now, let me give you a live example. Let's say that at the moment I'm expecting the gold and the silver both to drop down. That is my expectation. As you can see, only from structure, you can see that while making this corrective pattern, we had the same corrective pattern on the gold, but the silver was managed to pull the chart higher, meaning that the silver is stronger than the gold. And we can base our opinion on the indicators themselves. We don't need the chart itself, but I want you to see that from the chart it's reflected. If we will receive a weaker dollar in the market from the announcement, that the silver will cause the silver will form a stronger movement higher. If we will receive a weaker dollar, a stronger dollar in the market, sorry, then the gold will pull the chart lower in a more efficient and cleaner formation. You can see that on the RSI alone. The silver is at 45 and the gold is at 43, meaning that the gold is weaker, the silver is stronger. So expression of good, stronger dollar in the market will be expressed through the gold, and an expression of weaker dollar in the market will be expressed as a potential for a binary option trading in front of the silver. That completes our session. If you've got more questions, just type on the chat. If you need me to analyze a specific asset, I'll do that happily. Just type on the chat and I'll be able to help you with that. If not, then I will close the session and we will get ready for the announcements that we're expecting to see. Thank you. All the best with your trades, Barbara. Thank you very much. Sure. Again, the brokers are there to help you with anything that you need. And I'm sure that you'll be able to see that that side during the announcement that we will have today. Thank you very much. Have a pleasant day. All the best and bye-bye.